I'm assuming the forecast for contraction is a lot to do with China and the coronavirus. How severely is that impacting your business?
Good morning, Matt. Good morning, Anna. Good morning here from Munich. The coronavirus is clearly a challenge. As you said, we have we're showing numbers today that are better than expected for the year 2019. It's not only top line what counts, it's margin and in particular free cash flow. And I think we have shown in 2019 that we are able to generate significant free cash flow even better than expected. That gives me confidence that we will also cope with the unexpected situation now with this coronavirus. In such a situation, we all know that all forward-looking statements are somehow working a hypothesis. Our guidance says minus 5% for the auto sector in 2020. That's in line with what others have said so far. And it's a clear commitment that we want to do our best to fight this crisis and achieve our targets.
Good morning to you, Klaus. What are the self-help measures then, given that as the backdrop, the spread of coronavirus globally? What are the self-help measures that you at Schaeffler can put in place to protect yourselves as a business, financially I'm talking about here?
Well, we were one of the first in China that set up travel bans and did all the things that everyone is doing now. Let me say, in China, all our plants are back to work. 80% capacity utilization is what we're seeing at the moment. 95% of the people are working. So the situation in China is clearly coming down. And here, the most important things were, A, to protect the health of our employees. Second, to make sure that the supply chain is not interrupted and that we act in a most agile manner. And clearly, number three, we should not overlook, it's very important to support our customers in this situation. And if we apply the same measures that we did in China here in Europe, I feel confident that we have a chance to cope with this unprecedented environment.
Isn't that going to hurt business even more? I mean, we've seen, Klaus, for example, the Geneva Car Show, the Geneva Motor Show canceled. The Hanover Industrial Fair has been canceled. Don't these things impact your business in a negative way?
Well, Matt, this is a new type of risk. We have all learned to deal with geopolitical risk, with natural catastrophes, with trade wars. This is a new type of risk, and the situation is unprecedented. So I think what is very important that we stay calm, that we stay focused, and that we show some leadership in each of our businesses, and that's what we are committed to do. The fact that something is canceled is right from my point of view, because we need to avoid that the virus spreads further, but it doesn't mean that there is no potential for a V-shaped recovery in the rest of the year.
The Chinese auto market is, it seems, set for another drop in sales, Klaus. What are your expectations for the demand story in China?
Well, the demand story in China, I think the data point that we all have is that February was down minus 80% in car sales. We're expecting that March will be better and April will be even further better. So if you extend that into the year, and if you assume that the Chinese government, where the crisis seems to have seen the peak, will also take action, I think that is a potential that over the year, the drop will be digestible. Don't forget that in the last year, in 2019, the first half year was a minus 15% drop in auto production, and we also cope with that. So let's stay focused, and let's say that we concentrate on the data we have and draw the right conclusions.
One of the things that you're doing is focusing on cost cutting, the core cost cutting program in your industrial division. How does or does the lower price of oil help you do that, Klaus? I mean, how much is fuel in terms of your costs, and do you try and take advantage of $20 oil?
Well, let me first comment on the cost cutting and the cost and capital discipline measures last year. We have, as you saw from the release this morning, we have reduced our workforce in 2019 by nearly 5,000 people. We have initiated, end of last year, November, another program with about 1,300 people. So I think we are well prepared in terms of managing our cost base. You know, in terms of material prices and energy cost, a lower oil price clearly helps us. What is more important is the steel price, and also here we are seeing a little bit of positive support. So let's wait and see what the year is going to bring. We're clearly looking at the whole holistic P&L, and while there is pressure at the moment from the top line, and while our self-help measures have proven to be successful in 2019, I think the material price part of the equation could help us as well.